Exactly. If you look at Michigan, certainly it's recognizing that we're down 50 points from where we were at the high a couple of years ago. You look at the Conference Board, also terrible numbers, suggesting that the consumer is being more frugal, more more smart about where they spend their money. But to your point, you still have an incredible labor market. The quits rate is still right about 4 million. People are finding jobs as they want them. For every 2 jobs open, there's 1 person looking. Your wages are still increasing at a relatively high rate. We're just not seeing that weakness yet. And for that reason, while confidence is shaking because of this concern of this greatest forecasted recession in history, it doesn't show up in the labor market. And when people have a job, they're going to spend, and they're spending it more on services than on goods, but they are going to spend enough to keep the economy going.
Indeed. What would be the final straw for consumer sentiment to break, for the cracks to emerge in the jobs market, you think, which would, of course, then make the Fed decisively pause?
It's a great question. You're seeing one crack that has me concerned already. Temporary jobs. Temporary jobs are down 3 months in a row. I'm very curious tomorrow to see what happens with temporary jobs. They are the canary in the coal mine. You're seeing weekly jobless claims inch a bit higher, and then month over month, continuing claims be about flat. We're not seeing the weakness yet. The key here is what the crack will be. If you really see a break in temp jobs, and then you see weekly claims could tick higher, that's the first sign that the Fed should go on pause. I don't think they pause in June. I think, in fact, they have at least 1 or 2 more hikes in them. I will say one thing that's terribly important to the points made earlier. The consumer in the United States will run out of cash that was saved during the pandemic, and that happens about September or October. So if we don't get a real pressure on the job market to where it breaks, we'll survive this in a very mild recession. But if we get an uptick in unemployment because of high inflationary costs, then the consumer runs out of money, then we have a deep recession. And that's why the market's sideways right now, because we just don't have enough real leadership to know what's to come next.